Taneja, Executive Director at Axis Capital. Manik, thank you so much for joining in with us this afternoon on ET Now. Just when you talk about it in terms of the numbers that have come in so far, right? When you look at it, most of them have trimmed their guidance. Only an LTI Mindtree or Tata Elxsi and HCL Tech, there's a better commentary coming in for the second half of the year. So firstly, if you could just give us a broad-based view on what you are making of the numbers so far and what should we be expecting in the second half?
First of all, thank you for having me on the show. When you look at the broader universe this quarter, and I'm talking about both the tier one companies as well as the tier two techs, most companies have just about managed to meet modest expectations, or in some cases, even disappoint from a growth standpoint. For tier one techs in particular, you saw that they held on to margins quite well. In fact, margins were flat to an improvement trajectory on a YY basis across each of the tier one companies. But that needs to be seen in the context of the fact that some of them also deferred or delayed wage increments, so it may not be a like-to-like comparison. For the tier two companies, some of the names that you mentioned, uh, growth just about managed to meet expectations, and margins and the margin difference that has been seen for tier 2 techs through the course of last 12 18 months when the industry was going through significant supply side pressures, some of that is coming off. In cases like a persistent or even emphasis which reported earlier this morning, the margin performance has been aided by certain one-off provision write backs. Otherwise, the margin performance would have been quite disappointing. So, at an overall level, I would say that the demand environment continues to be a spot of bother for the sector as a whole. Even for companies which have suggested that second half might be slightly better, it is predicated on a much on expectations that Q4 essentially and tends to be better, while Q3 companies do expect higher than normal furloughs.
Well, Manik, given the fact that most of the IT companies have already come out with their earnings and Tech Mahindra earnings are next week, so what are your expectations from Tech Mahindra, keeping in mind how the current IT companies have reported earning, what their commentary has been? Has your expectations changed?
So on Tech Mahindra, our viewpoint over the course of last 6 to 9 months essentially has been that FY24 is a year of transition, and that too in the backdrop of a weak macro environment. One should not have very heightened expectations for Tech Mahindra. You saw significant disappointment come through in Q1, wherein order bookings were subdued, revenues declined on a sequential basis. I will not be surprised if second quarter tends to play to a similar or play out on a similar basis. In case of Tech Mahindra, the positive view in general is predicated on a sustainable uplift in operating profile that can happen for Tech Mahindra, given that in case of margins they have significant room for improvement. But I guess a lot of those things are an expectation for FY25 and beyond. I don't think so. Second quarter for Tech Mahindra should be any significant positive surprise when they report next week.
Okay, not much of a significant positive surprise even for TechM. Manik, also if you want to understand in terms of, the deal wins, could we expect that any sort of an improvement in that terms at least for these IT companies, whether a large cap or a mid cap?
So when you think about the deal wins, you've seen some of the bigger companies report large cost optimization deals being reported by the tier one companies, whether it is Infosys, which reported multiple deals alongside even HCL Tech, which reported the Verizon deal in early August. So from that standpoint, order booking has been fairly good for tier one companies. Even though these deal wins have been coming through, the conversion to revenue growth or to revenues in general essentially has been weak, which is a function of two aspects here. One is that even for deals that have been signed, the ramp ups taking longer, and the second aspect is that there is a leakage on existing book on existing discretionary projects, and thereby while companies might be reporting this gross booking number, this is not translating into net new growth. Are companies or is the commentary from companies providing us any confidence that some of this leakage should get addressed in the immediate 1 quarter or so? At least the qualitative commentary remains very mixed on that front.
Circling back to Tech Mahindra, you were talking about the operating margin front. Now, last quarter we had seen a sharp drop in the margins, around 6 to 7% was the EBIT margins, but that was largely because of a one-off. So, are you expecting that to turn around in the second quarter, or will margins stay around these levels for some time now?
So there might be similar kind of cost that the company might account for in the second quarter, and thereby the reported margins may not show any significant uplift in the second quarter. That's the expectations for us here at Axis Capital.
Expecting the margins to be around these levels for yet another quarter. But do you expect some bigger changes or bigger announcement to come in, given the fact that there has been a management change now in the company?
So the new CEO announcement happened in early March, with Mohit taking over in mid-June. And there is a hand holding between the outgoing CEO and Mohit. And this is the last quarterly results with CP being in charge. I would say, and there have been media reports that have talked about a reorg at the organization. I think that should be the primary focus for investors and analysts alike, in terms of trying to understand what changes the company essentially is making at an organization level to rev up both growth as well as improve the operating profile.
Manik, lastly, just want to know, in terms of, given the current valuations, the numbers have come in as well, what is looking attractive to you in the IT pack, large cap, mid cap? Where are you finding value?
Sure. So at Axis Capital, we do have a negative view on the sector, and with Tech Mahindra being the lone positive rated stock amongst the tier one companies, we do not have any buy rated stocks in the tier two, buy or add rated stocks in the tier two coverage, with the exception of KPIT in the ER&D universe.
Well, thank you, Manik, for giving us those insights. Moving